This is Chicago's very own WGN Midday News.
Welcome back in Your Money Matters. We're talking about the housing market today. Here now is Geraldine Fox from the Illinois Association of Mortgage Professionals. Geraldine, you've been in the mortgage business 17 years.
17 years.
These have got to be frustrating times for prospective home buyers. Mortgage rates are at, what, the lowest they've been in, 40 years maybe? 40?
Absolutely.
A long time.
Yes.
Housing prices are...
Since Kennedy was president, as we say.
Yeah, the early 1960s. Housing prices are the lowest they've been in quite a few years. And yet only the most credit-worthy borrowers are getting mortgages. What's a person to do?
The first thing that a person needs to do is look at how qualified you are before you go look at the house. Do not fall in love with that house until you know you can get a mortgage. Working with a member of the Illinois Association of Mortgage Professionals maximizes your ability to get a mortgage. We work with an array of mortgage lenders, not only banks, regional banks, but also mortgage companies that don't have retail divisions. A lot of those outlets have specialized mortgages for individuals in specialized circumstances. The next thing that you have to do is log on to our website, Illinois Association of Mortgage Professionals, imp.biz. Click the red button through the legislative initiatives. We're proposing some legislation with the National Association to help expand mortgage programs right now.
Well, you know, that leads actually to another question. You know, a lot of banks got federal bailout money, and the criticism I'm hearing is they're not lending that money. Is that a valid criticism?
From what we're hearing, if they're lending that money, it's taking folks a lot longer if they're working with a banking institution than if they're working with a mortgage broker. Keep in mind that mortgage brokers not only work with a variety of lenders, but we're all licensed by the Illinois State Department of Professional Regulation. So you know you have somebody who's passed competency testing, passed criminal background checks, their fingerprints are on file, so you know you have somebody that knows what they're doing and can find you a mortgage if there's one out there for you.
For those who don't have the best of credit scores, they're going to pay a little higher rate, aren't they?
If they can get a mortgage at all, they are going to pay a higher rate, unfortunately.
How much higher? Or is it?
Not always a full point, but in some cases it could be that much higher.
Right. For those who have never bought a house, who've never taken out a mortgage, try to explain just the significance of a 1% difference in interest rates, a 1 point difference. I'll just say a $200,000 mortgage. It can mean a lot in the monthly payment. It
can mean $80 to $100.
That's significant. What about adjustable rate mortgages? These ARMs are the very thing that got a lot of folks into trouble and really got this country's economy in a good deal of trouble. Are they a good idea?
I think adjustable rate mortgages have their place. They've always had their place. They're not a good idea for first-time home buyers. First-time home buyers tend to need the comfort of knowing what that payment's going to be over the long run. Counting on increases in pay and that kind of thing we found isn't a good idea because there's always a market correction around the corner and a recession where people lose their jobs.
Right. When do you think the housing market's going to turn around?
I think that we're slowly turning around. I think that there's never been a better time to be a first-time home buyer in this country. Houses are more affordable, as you said, that they have been for years. Rates are historically low. The first-time tax credit allows people to come out of the transaction with a little reserve. And, the association has worked hard to get that tax credit extended. It looks like it's going to be.
How long? So it's going to be around, what, a few more months then?
It looks like it's going to be around through April, and it looks like Congress took one of our suggestions. They're going to be offering it to move-up buyers also, not just first-time.
Before I let you go, how much is that tax credit? What does that mean to a first-time buyer?
$8,000 for a first-time home buyer, up to income limits of $100,000 now, but I think that's also going up. Our understanding is that for those move-up buyers, it's going to be $6,500.
That's too good a deal to pass up?
Absolutely.
Geraldine Fox from the Illinois Association of Mortgage Professionals. I want to thank you so much for being with us. You're going to be around taking questions
Absolutely.
For the next, till 1 o'clock. So check in with WGNTV.com, and hopefully Geraldine can answer your questions. Dean Richards is coming up with details of the Twilight Stars coming to Chicago. Keep it here.
Don't forget to send in your questions for today's web chat.
Yeah, we got Geraldine Fox from the Illinois Association of Mortgage Professionals answering your questions. All you have to do is log on to WGNTV.com, and you'll see a link to the chat area on our homepage.
Don't forget, we're hosting a live web chat for the next hour. Mortgage expert Jerry Lynn Fox is here to answer all your questions. Just log on to WGNTV.com.
And we're hosting a live web chat this midday. Mortgage expert Geraldine Fox from the Illinois Association of Mortgage Professionals. He's in our newsroom. You can submit your questions at WGNTV.com, and we'll check in with her just later in our newscast. We're answering all your mortgage refinancing questions this midday.
Jerry Lynn Fox from the Illinois Association of Mortgage Professionals is in the newsroom answering your questions during a live web chat. And what are some of the more common questions you're getting, Jerry Lynn?
We're seeing a number of very interesting questions. First of all, in terms of refinancing, we have a number of people who state that they've qualified for a loan modification, but were told that they shouldn't get one because their rate was still too low. If you have a good low rate and qualify for a refinance, that's probably the best way to go, because that's going to be a permanent lowering of your rate, where a modification is only a temporary lowering of your rate for a 2 to 5 year period. We're also getting a number of questions about purchasing. There are some individuals who are working currently, not in the line of work that they've had in the past, and not full-time. They're thinking that they can't do anything to purchase, but that may not be true. They probably should call a licensed loan originator and have their income streams reviewed. It's possible that if that's stable income in a line of work they've been doing, it may qualify. They may also qualify for a non-occupant co-borrower, so that they could take advantage of the tax credit right now.
Once again, explain that tax credit, if you will. How much is it, and who can get it?
It's currently $8,000 for a first-time home buyer. Our understanding is that under the proposal, that $8,000 for the first-time home buyer won't change, but move-up buyers who have owned their property for 5 out of the last 8 years will qualify for a tax credit of $6,500.
That's a hard deal to pass up.
Absolutely.
Would you agree that mortgage rates are at about as low as they're going to get?
You know, if my crystal ball were that good, I probably wouldn't have to do mortgages, but I think that they're probably about as low as they're going to get. They've been within this range for the last few months. I don't see them going substantially higher in the next few months, but I also don't see them going much lower.
So your advice would be then, if you could qualify for one of these low mortgages, 5% or below, jump on it?
Absolutely. I have people that have been waiting for an unreasonable period of time for another half-point interest rate increase, and they lost the refinance that they qualified for. So if you qualify now, go for it.
Seize the moment. Okay. Geraldine Fox, thank you so much.
Thank you.
You still have time to send your questions in. Just log on to our homepage, WGNTV.com. There is a link at the top of the site. You know, you have about 15 minutes left to submit your mortgage questions to our expert this afternoon.
Jerry Lynn Fox from the Illinois Association of Mortgage Professionals is in our newsroom for our live web chat. And what would you say the rate on a 30-year fixed mortgage is these days, Jerry Lynn?
The rate on a 30-year fixed has been bouncing between just under 5% to about 5.25% for the last 4 or 5 weeks. So right around 5% is where you should be on a 30-year fixed, as long as you have good credit and your loan-to-value isn't too high.
Geraldine, put that in perspective for a lot of folks who may not have ever taken out a mortgage before. What is it? 5% is an amazingly low rate. Tell us what a bargain that is.
Well, 12 years ago, when interest rates hit, maybe a little more than 12 years ago, interest rates hit 6.5% for the first time since the Kennedy administration. And we were telling people, rates haven't been this low since Kennedy was in office. I am not sure when interest rates on a 30-year fixed were ever at 5%. It's almost never happened before.
Yeah, it's almost like a once-in-a-lifetime event. Geraldine Fox, thank you so much.